Welcome to the Decentralized Edge Podcast, where blockchain and Web3 stories take center stage. I'm your host, Sam Evans, and every episode I bring you candid conversations with the engineers, founders, visionaries, and investors shaping a decentralized future. Whether you're looking to break into Web3, scale a team, or stay ahead of industry trends, this is where you'll get the insights you won't find anywhere else. This podcast is brought to you by Volatile, the leading specialist talent partner, connecting top blockchain and Web3 disruptors with the world's most innovative companies. Right, let's dive into today's episode.
Hello everyone, and welcome back to the Decentralized Edge Podcast. This is episode 3, and this week I'm joined by Calder. Is it Zwerling?
Nailed it. Yeah, it's Zwerling. Yep, it's a weird one.
Head of recruitment for OpenSea, obviously one of the biggest names and biggest organizations within sort of Web3 and blockchain world. Calder, would you be able to just give us a quick rundown, introduction, paragraph of who you are, where you've come from, and how you got to the position you're in now?
Absolutely. I've been recruiting throughout my career. Initially started in the agency world, worked some, kind of shorter term contracts with some startups, some larger scale companies as well too. Most recently, over the last 4+ years, I've been at OpenSea as the head of recruiting. I joined as our first full-time recruiting hire, and really the first HR hire overall, and have led the recruiting function and efforts throughout the crazy growth and maybe more challenging winter times that we've experienced more recently.
Yeah.
In addition to working at OpenSea, the last 2.5 years or so, I've also been an advisor at Variant, helping our portfolio companies and a little bit, the fund internally with all things related to hiring, and, kind of helped our founders remove some roadblocks and, kind of just navigate some of the unique or novel hiring issues that, some of these early stage companies help as well too. So, seen the very early stuff, seen, the mid later stage, and then, as I mentioned, made my tour of, some FANG companies at not Facebook, at Meta now. It was Facebook when I was there, and Google as well too. So I've seen a wide variety of scaling and hiring velocities and everything like that.
Yeah, nice. And I bet that's a big transition from like that sort of, is it Mang now, FANG world, like, and over to like OpenSea, like, I mean, that's a good like little segue into our first topic, but Web3 versus the whole typical like engineering and technical hiring need from like typical tech companies. Like, what from like those two different worlds, like what's been the biggest sort of shocks, learns, consistencies that you've had to navigate, come across, or like slot into?
Yeah. Coming to startups, and in particular within Web3, the speed of everything is just really a breakneck pace compared to the larger scale Web2 or FANG. I think within AI right now, we're starting to see a little bit of that similar kind of speed that I've kind of been comfortable with and kind of operating within crypto. Beyond that, it really is unique. And when you specifically talking about and apply that to recruiting, what that looks like, I mean, within the Web3, kind of startup world, it's not unheard of to go from initial recruiter screen on, on Monday to an offer, by Friday. Whereas at the FANG, scale and Web2 size, you're lucky to go from recruiter screen on a Monday to a initial hiring manager interview on a Friday, So that pace and velocity and speed is just like so different, kind of compared to some of the previous spots that I had been at. And that's kind of in the ethos and in the DNA of everything, and not just recruiting, with engineering and design and product and everywhere across the board. Holistically, we're looking for folks who have that comfortability with that speed, who bring a skill set around scrappiness and ambiguity, the ability to pivot and operate in maybe unclear or uncharted, territories. In the past, I think I've seen some Web2 talent maybe struggle with that because they come from this environment where they've got a clear flight plan, expectations, box that they're playing within. Whereas, you come over to the startup world and Web2 or Web3, startup world, it's scrappy, it's volatile, things change, and you need people who have the stomach and ability to kind of handle that and work through that. So, that's definitely something that I've seen as a difference. Maybe diving deeper into the actual like recruiting and interview processes. Beyond that, from my experience, it seems some of these like Web 2 FANG companies are indexing more on these like theoretical CS, kind of questions, interview process that way, where, at the startup stage and with Web 3, I think it's a lot more, here's the problem we're really working on. How do we actually solve that, and practical kind of problem solving and kind of working through folks there. So that's been some of the, kind of differences. It's not, a sweeping generalization of that's how it always is, but, what I've, picked up through my time at both, those are some things that have kind of really stood out to me.
It's funny, isn't it? Because it's like with those big companies, I think it's Google specifically. I think part of their like cultures and values is like they need people that can handle ambiguity, but it's a different type of ambiguity. Like
totally,
you still have that structure and security of the monster company that's around you. Yes, your role might change from this team to that team or whatever it might look like, but when you're dealing with like the startup world, especially what the space that you're in, a blockchain startup world even more so, that has the crypto winters and things like that, investments come and go and stuff. So like handling ambiguity in that sense, where it's like, I don't know if I've got a company around me, period, in the next like 6 months sometimes.
Yeah, so the time horizon is so much shorter, right? And Google's got the resources to invest in these specific initiatives or resources or plans in kind of the longer term and kind of see that out. But in the startup world, you're not talking years down the road. You're not talking next half or something. Sometimes you're talking like a month or weeks or days. And so that is a real differentiator, I think, from some of these larger scale consistent places where they've got the resources and the time to be able to make those investments and kind of see how they kind of play out, where early on, at these startups, you need to know if things are clicking early, if it continues to make sense to go down that path or that trajectory you're on. And if not, okay, let's pivot, let's change, let's kind of course correct. So we're feeling a little bit more excited about the direction or the ROI or however you want to measure, what success looks like there.
It's funny because do you think that like, for any like good engineer or for any engineer that's interviewing with like a startup company, whether it's blockchain, whether, no matter what it is, if it's a startup, well, do you think like a sensible question to ask is like, what's the run rate look like? Because when you're making a decision and you might have a couple of offers in hand, if they're like, oh, we're playing with fire, we've got a 3-month run rate, but we've got an amazing culture and free iced coffee in the kitchen, like it's a sensible question, right? Where I don't think many people do ask things like that.
Yeah, I think it's important to know that, to know, what the cash on hand is, to know who the investors are and kind of who's backing it and what, the kind of time horizon looks like there. And if the runway is shortened, okay, what's the plan beyond that? Is there, the interest and ability to do, another round or raise additional funds or something like that, and kind of what the plan looks like. So when you're going to a startup, I think it is important to really dig in on those areas, whether that's with the founders or if they have like a finance team person on board who can really kind of talk you through that, sign an NDA so you can really get all the juicy, good details and understand, kind of what you're stepping into and where you're going. Yeah, I wouldn't expect the startups to have a 10-year runway, right? That's not like the time horizon that most of these startups are operating on. Yeah. But if they've got a couple years, that's a pretty good sign. Where I'd maybe be a little bit more concerned if 3-6 months, and there's no ability to extend that through bringing additional funding on or tapping into an untapped revenue source. That's when I'd be maybe a little bit more guarded or concerned. But it really comes down to the risk appetite for that individual or engineer or non-eng person as well too. It applies to.
Yeah, for sure. Yeah, and especially when you're trying to attract top talent, like especially like a lot of these blockchain. I mean, OpenSea is one of the biggest names, so like I'm sure they're looking for like real top talent and stuff. And you are. I had this conversation with Dan McCarthy from Paradigm. We were talking about when people think like, who are you hiring? Like, is it like a crypto contract engine, like a smart contract engineer and things like that? And like, yes, that obviously does exist. We can dive into like the different sourcing methods for different talent, but like from a general perspective, the types of talent you're looking for is competitive with like FANG type companies as well. You're looking for top product people, you're looking for top program managers, you're looking for top engineers that can come across and build infrastructure and cloud environments and stuff. But so being able to attract that top talent, you need that security as well, because it's already to be honest, I don't think it's as up and down as. Well, I think once you're in the industry, you realize that the world keeps moving forwards with it, and it's just innovation taking place. But it's more like the general sense of the public's skepticism over and lack of understanding around blockchain and Web3. Like my mom and dad haven't got a clue what it is, but they've heard what Bitcoin is and they see the price go down. That's the general public population. But yeah, being able to attract those top talents and saying like we're a legit company who's doing amazing things, and like yes, ignore all that noise on the outside, but like come join us, like we're stable, sort of thing.
Yeah.
It's something that people need to know. How do you navigate like selling that? OpenSea name's great, obviously, so I think that helps. But how do you sort of navigate that sell of like trying to get candidates to ignore the noise and look at you as like just a tech company, which you are?
Yeah. Well, it kind of depends on the environment, right? Are we in like a winter where things are really slow and challenging, and there's not a lot of like individuals or external talent coming to you and jumping into the space? Well, then that's actually sometimes a really good time to hire, because these are people who are not just jumping on the next big thing or just jumping on a quick liquidity event or token or something like that. They are intrinsically motivated about what you're building. They've got the comfort for the volatility that your experiences, and they're coming to you kind of the downturn. So sometimes you can make some of your best hires in the winter because those people really coming over to you are really excited about it and understand the long-term vision.
Yeah.
On the flip side, when things are kind of humming along and the markets is booming, that's when you're going to get a little bit more of those either crypto curious or not crypto native people, wanting to kind of jump on board. And I think for those people, it's important, yes, we want those people who have seen scale, who know what really great looks like, who, come from these like reputable, previous companies and have shown really high caliber and quality work. But you really want to index on like, why are they joining you? Again, is it that they see that, kind of quick, IPO or exit or liquidation event, and that's what they're indexing on? Is it they want to just move to a startup, or are they really believing in what you're building and where you're heading? In OpenSea, we experienced some of this stuff when the things took a turn. There were folks who would join us because they were excited about the company, the brand, where we were headed, but they didn't have that real like passion or excitement for NFTs. And when things took a turn, like some of those people left, and it was challenging for us. But we learned from that. We've evolved like how we interview and really make sure that everyone that we're bringing through now, and over the last couple of years, candidly, have that like, kind of gut intuition, gut drive and excitement for the space, because we know whether it's good days or bad, they're not going anywhere, right? Like don't get too high when things are great. Don't get, too low when things are bad. Just focus on building, focus on the quality of work and kind of where we're headed. And that's what's inevitably going to set the individual up best in their career, as well as the company best, in the longer term, like time horizon and outcomes.
It's like, so it's just a familiar problem, right? For any tech company, it's like every tech company has their niche space that they're operating. We're doing AI, we're building AI agents for this specific purpose. So you're trying to draw people into that world. And it's the same thing with OpenSea and NFTs and the whole sort of Web3 world as well. Yeah. And on one hand, you're trying to convince the people to join the organization because you've probably interviewed them, think they're already a great addition and a bar raiser for the company. But on the flip side, you don't want to hire someone who is going to jump ship at the first sign of like, the rough seas kind of thing, which in the blockchain world, when you do have all that external noise, like it's going to come. So it's like, can you ride those waves, which is a really key thing. But again, it's like same but different, right? Like it's like every tech company has the same problem, but it's just from a different angle, I guess.
Exactly.
And sort of moving on to like scaling and growing teams, you've come from building teams at like, amazing top companies, like you've already mentioned, to that sort of startup world. Like industries aside, more from like a sort of startup versus giant, biggest tech company, biggest companies that have ever existed. Like is there any differences there, do you think, apart from like the sell of who you are? Because when you're at Google's and your Metas, all you've got to do is sell like the projects that you're working on, and everyone already knows the brand names, they've already got the branding and stuff. But what's the major differences and hurdles there, do you think?
I think it's A lot of candidates, especially, as we've been through a bunch of, rifts and tougher times in the economy, going back to what we talked about earlier, want to make sure that the foundational aspects of the funding and the runway are really solid for that company. And there is that safe and kind of secure trajectory, and that the hires that are being made are being done thoughtfully and intentionally and, vetted across finance and, the executive team and the HR team to make sure that there is the real scope of work and funding to support them. So I think that's like a really critical thing.
Yeah.
And then beyond that, it's just, I think it's really having a crisp, I like to frame it as just a, really fundamental, like past, present, and future of the company, right? Like, why did we start, or what was the problem we're looking to solve, or how did the kind of company come together? Where are we at, kind of current day right now? And then as we look 2, 5, 10 years down the road, however you want to set that time horizon, what does success look like? What is our flight plan, and how do we kind of get there? And I think being able to do that, with the candidate really helps give them a level of comfort and kind of understanding and historical context as to how everything's kind of come together and kind of where we're headed. And then they can understand how their skill set, specific role fits into that equation, where they can kind of add value, or what specific things they can do to ensure that we're unlocking that exciting trajectory and future that we're kind of working on.
And where do you see most of that talent, the talent you're talking about? Like, where do you see it mostly coming from? Is it people typically from like other startups, or is it people from big companies that want to try their hand in the startup world, or maybe take advantage of teeing themselves up for an IPO type opportunity and things like that? Because where do you see most of that talent coming from that's attracted to companies like OpenSea?
Yeah, it tends to be the startup-y folks, people who have been, in the weeds, having a high degree of impact, really building quickly and shipping quickly. That said, I think, maybe the archetype that we at OpenSea have seen a lot of success with is someone who's been, through the startup, understands the speed, the ambiguity, the context switching that you need within startup world, but has also seen the like scale and size of, what a good, call it FANG, kind of company looks like. So they're able to kind of build and kind of work with that, because most startups don't need, the architecture at scale and size of like these FANG companies, but having those fundamentals in early are really going to help, build and scale for the future, ensure that you don't have to kind of go back and redo whole code bases or kind of adjust complete processes, so they're built for that like later or larger stage. So I think like in an ideal world, you get someone who's like a little bit of both. I do, from my perspective and my experience, I found like the lifelong FANGer is someone who's gone from, first job was at Amazon, then, went to Google and is now working at Facebook. Them moving into their first startup tends to be a little bit of like culture and work shock sometimes, just because things are so different than that environment that they've been in. That doesn't mean that they can't adjust and kind of figure it out. But, anecdotally from what I've seen, those, kind of folks tend to struggle to make a little bit of the adjustment to that startup space and kind of speed and scale. Whereas the, lifelong startup people, or, like I said, ideally the startup / FANG folks tend to hit the ground running pretty well and help, add a lot of value, because they bring a pretty, unique and helpful perspective on things.
For sure, yeah. Especially if they've like kind of been there and done it previously within those orgs.
Exactly.
And remind me with OpenSea, like how large is OpenSea now from like a headcount?
We're about 75 people, somewhere right in there. So still, relatively small in the grand scheme of things, especially given, the credibility that we have in this space and in particular with NFTs and now flexing into tokens a little bit more. So really everyone across the board here has a high degree of impact. We've internally really been radically embracing AI across everyone's workflow and just trying to make sure we're as efficient and effective as we can be with the tooling that is out there. So I think, as of recent in particular, that's helped keep our like headcount number down, because we're enabling people to, produce at capacities and speeds that they weren't able to do before. We were at a, offsite, recently. And I think, one of the engineers said like, hey, I find myself being probably about 150% more effective than I was, before because of some of these AI tooling and what it can really unlock. And so when you think about that across, multiple engineers, boy, oh boy, can a smaller engineering team have so much more velocity and horsepower and impact than they used to. And so, AI in particular, and Devin, who's our CEO, is a real champion of it, has really gone a long way in helping our development speed and also just kind of keeping our, kind of headcount numbers, lower in the grand scheme of things.
Yeah, there's another all talent team. Dan and I touched on recruitment and AI in the future, and it's because you see a lot of people certainly on LinkedIn and articles about how AI could replace a recruiter's job, and I just flat out disagree with it. But I think it can, and I think Dan agreed, was recruiters that can use AI are going to sort of take over the world kind of thing.
100%.
Because it just makes it more
across the board. I think honestly, any recruiting, engineering, design, I personally, AI is not going anywhere. And I think anyone who's not really trying to radically embrace it into all of their workflows and into their day to day, 6, 9, 12 months down the road, whatever you want to say, they're going to be at a disadvantage compared to the people who are using it. And so it's been awesome to see some of the ways it can kind of save time, within recruiting in terms of, writing interview feedback, kind of taking notes, handling scheduling. I've trialed a bunch of these AI sourcing tools, which I really think can help kind of generate, kind of top of funnel. But I'm, with you and with Dan, that I don't think any candidate wants to negotiate, with an AI bot, really. You want to understand the people at the company, who's really working there, the culture, the vision, and the recruiter is one of the best sounding boards and, people able to kind of convey that and personally connect with the candidate to understand what they're really indexing on in their search. So, I know that recruiters are still going to have a home at companies that are scaling. Maybe it's not as many recruiters as we've seen in the past because there are ways that AI can help, make folks more efficient. But, I still think recruiting is a pretty important, position to have at a new and growing company, obviously.
It is crazy because 90% of our job in the recruitment space is relationship building, and 10% of it is actually making hires almost, because those hires would never come without having built up a network and relationships and knowing who to go to and things like that. And it's it's just not black and white. And then recently we negotiated a head of engineering compensation package, and this person was coming from Google going to a blockchain startup company, and when you have to speak to that person and you're here's what the budget is, and then they're saying well, this is what I would need, but there's reasons behind they need what they need, right? And that took multiple personal conversations with me and this person. I met him for coffee and everything. It's they're not going to meet a robot for coffee and be forthcoming with it, or explaining my kids need this, or in private school, or I've got this, things like that. So it's just there's the recruiters that are already good at their jobs but can also embrace AI to make them more efficient or open them up from a time bandwidth side of things to go and continue being great at the important stuff that keeps the ball rolling. So we'll see. The one thing I did touch on there, actually, I was going to ask you about, in the blockchain sort of crypto Web3 world, you get a lot of token distributions and as part of compensation packages and stuff. And I assume this is stuff you've had experience with. It's for me as a recruiter, obviously from the agency side of things, I think it's amazing because all of a sudden you're not just selling a private company with sort of fictional equity until there's an event. You can actually compete with public RSUs, because you're well, here's a token, it's going to vest the normal RSU, but it's a publicly traded asset. You can literally sell it the day it vests or whatever. What's your thoughts on that?
Yeah. I think it's an important lever, and we're seeing it more and more get pulled on across the board within crypto. You know, when we saw the early in January when the president changed within the states, like that seemed to really relax a lot of like the regulatory scrutiny and concerns, and you saw a lot of projects rush out and kind of launch tokens and get things out there. Candidly, with some like mixed results. We've seen some tokens really kind of flame out. So I think it's important for teams that don't already have a token out and kind of going forward to be really intentional around why their token is going to matter to people and why folks want to hold it, as opposed to just turning it into like a meme coin or something like that, right? Is there utility or governance or things that can kind of be built into it so that folks want to hold it, kind of longer term, and really set yourself up for that like longer term success. But as a part of the compensation package, time and time again, I'm seeing it, with a lot of American companies leaning into that and using that as a lever, and you can see as you think about like total compensation as a whole, maybe 50 to 60% of the compensation package is cash, whether it's salary or bonus or something like that. You'll see 20 to 30% equity and 30%, kind of tokens or something, a structure similar like that. And generally it's pro rata and the equity and tokens are similar, kind of percentage. The vesting schedules are something that's been, evolving. The traditional 4-year grant with the 1-year cliff is particularly with like the RSUs and equity, kind of the standard benchmarks, but more and more are moving to 2-year grants without a cliff or a 1-year grant where they're doing then just 1-year grants year after year. And those are really helpful in the token world where we see so much volatility in the pricing, right? And ensure that like, your employees are getting fair value and fair compensation year after year. Some larger scale companies, Robinhood, I think Coinbase moved to a similar yearly grant stuff too on their equity side of things. And so more and more, I think we're seeing companies index out of that within crypto and Web3, just because it's, the easy, you can see 90% swings in token prices, and that's not uncommon. And if someone gets a 4-year grant and a year in, all of a sudden, it's down 90%, that's tough, to kind of retain that talent and for them to kind of feel motivated. And so I think being strategic with the lever around, the grant duration, around, kind of refreshing year after year, while it's a heavier task at times for HR people and finance team to figure this stuff out, it's just going to keep like employees aligned and feeling like they're getting fair, consistent value. And I think that's all employers want too, is people to feel like they're getting fair compensation value for the work that they're doing.
For sure. I think like the head of engineering role I just talked about, like the token distribution was a massive part of the compensation package. And it's like the good thing was that they joined at a time where it was already kind of down. So it's like, here's where it was. Like, even if it gets back to there, you're probably set for life. Like, all it's got to do is get back to where it's been before. But then, like, because you're head of engineering, you also have a massive influence on that. So it's like, back yourself a little bit kind of thing. But I understand there's a lot of risks, and when you've got families to think about and stuff like that. But surely it's the same with everything, right?
Exactly.
So like any companies or you join a startup that's not blockchain with token distribution, you're taking a piece of equity that's meaningless, and like you're hoping that you can contribute so much that the company does have the best chance possible of success. So yeah, it's but it's just, it takes a certain stomach for most people, which is why I say, like, a lot of startup people go to startups and people that have been in stable organizations that don't necessarily want to make that jump. But you do see it, obviously.
Yeah, no, I think generically you're right. Like, they just kind of the risk appetite for these people, like you kind of keep going back to the same types of things. And, folks' risks appetite can evolve over time, right? Maybe you have a family or get married and want that little bit more stability. I completely understand that. Or, you're earlier in the career, you want to kind of take those risks with the higher payout, but also the higher impact and stuff like that. So I think, when we think about like working with candidates, it's just really understanding their risk appetite, what their motivations are, independent of the comp stuff, but, scope of work and type of company and culture and being able to, throughout the process and particularly end of the process, reference that back, pull on those levers to see where it makes sense, or early middle stage of the candidate, opt out of the candidate. You know, if you're not aligned to, the risk appetite and the motivation, the time horizon and stuff like that, it's okay to come to that kid and say, hey, like, I want to be mindful of our team's time. I want to be mindful of your time. It seems like we're misaligned here, and having those radically candid conversations about that and putting all your cards on the table is just going to ensure a better experience for the candidate as well as a better experience for your team, because you're not going to waste time, with candidates that you can't realistically close or get on board.
For sure. I was just thinking the risk appetite in your household must be pretty high. Although you've got two very, very well established organizations within that space, but it's still that startup world, right? On both sides.
For sure. Yeah, my wife's over leading recruiting at Eigen, and so we're, for better or for worse, we're a crypto recruiting family right now. So it's been a bit volatile at times. It feels a little bit better this year than the previous couple of years, but we're both drawn to exciting work, high impact, and we've been fortunate to work with some great teams, and so far we're hanging in there, and it's been good to us.
It's great, yeah. And like the stuff that I'm gonna working on as well is like so like impressive and like exciting, and like we're so fortunate from our perspective to be like supporting those guys. But like, I think it's public knowledge now, like the Eigen like cloud and stuff like that is like coming out, being built and stuff. So it's really exciting. That's a good segue actually to the sort of final topic area, which is like trends and things within this market. I wanted to start off with OpenSea and one of the biggest hot topics in the whole blockchain world is the NFT world, and OpenSea was at the absolute center of all of that, and is I don't know what's the fair comparison, the Amazon of NFTs.
Yeah, it's kind of what we're going for, the Amazon and maybe Shopify to some degree of NFTs, and we rolled out OS2, now OpenSea, but called OS2 maybe 4 months ago. We spent a year and a half revamping and rebuilding the product from the ground up. The engineering team worked on this really ambitious architecture that supported a high degree of speed and scale and performance, and the product and design team worked on these really compelling UI and UX and way to kind of structure things. So there's a couple different modes you can look at as well too to that caters to the specific type of trader. And so really proud of what we got out there, and what folks have also been able to see is while the NFT is a spot we're not leaving and really expect and continue and want to be a core, home for. We're also supporting the trading of fungible tokens as well too on the platform, because our vision is there's not a whole dearth of like really compelling, exciting product consumer apps within crypto. And we want to be the gateway for so many people into the space, the continued home for them there, and really support every asset, every chain, everywhere, And so I think we're up to 20 chains right now we're supporting. We're continuing to iterate and kind of add some more. As I said, there's the NFT trading, there's fungible token trading, and I think it's a pretty unique and exciting time to be here at OpenSea and be in the particular trajectory and the lane that we're on. We recently acquired a company called Rally, which is a great mobile experience, and that's an area that we're continuing to invest and kind of build in, and more broadly across crypto. I think there's more and more companies across the board that are trying to strengthen their mobile like experience, and there seems to be a big push there just to improve that experience, meet users where they're at, make things easier, more intuitive and seamless to kind of just be in folks' pocket as opposed to just kind of relying on desktop experiences. So I think again, OpenSea seeing it, we're driving doing that, but anecdotally I'm seeing a couple other companies continue to lean into that space a little bit more, which I think makes a lot of sense strategically.
And where do you see it going from here? Like, I think general public didn't really understand, like, obviously what NFTs were, but they just saw, like, you hear about the crypto punks and the Bored Apes, stuff like that. And like, I think when you do a bit of research into it, and this is my understanding of it, is like the exciting part of it was that it would almost like a ticket into a community that can provide X, Y, and Z. So if you can acquire one, you're in this super exclusive club. But then when other companies start to distribute that, you could start looking into the world of loyalty rewards for consumer brands and things like that. and like tying that onto, and it's like completely decentralized, completely secure. It's exchanged one for one sort of thing. Is there other places you have like smart contracts where they're talking about you can fractionally own real estate through a smart contract? Is there a way that could be NFT, for lack of a better word, and put into like the OpenSea marketplace where it's like, yeah, you can literally acquire a piece of this sort of thing through the marketplace?
I think, with NFTs, we saw this real moment with PFPs and collectibles, 3 years ago or something like that.
Yeah.
Maybe 4 years ago. But candidly, you talk to our co-founders, Devin and Alex, like that kind of caught us by surprise, that we thought that the first NFT moment was going to be more around gaming, right? Because here's a community who's used to buying digital assets or skins for Fortnite or, whatever it is. So that was kind of the conviction that the early team had, but we saw it with PFPs, we saw it with collectibles, which was great. I think that, the gaming stuff is coming and is kind of on the cusp of a lot of excitement and a lot of like engagement here. There was so much money that flooded in, 3, 4, 5 years ago into crypto gaming. And now we're seeing some of these AAA games like start to come out. So there's the gaming vertical. You mentioned ticketing. I have a lot of conviction around, just event ticketing being NFT.
Yeah.
Right? We can solve the scalping problem. Artists can be, plugged into the secondary market sales, right? So ticketing, I think, is a really interesting vertical. We've seen it with art, but, how can that expand maybe into music as well too, right? And how creative musicians and creatives can figure out how to kind of tap into that to incentivize and reward maybe some of their earlier fans. Application of physical goods, right? Like, why does the deed of your house like sit in a bank vault somewhere, right?
Yeah.
I think there's a lot of different and exciting things that are to come. And part of the rebuilding of OpenSea that we did was to have an architecture that could support these different types of experiences, right?
Yeah.
Because if you're buying an event ticket, if you're buying a piece of digital art, if you're buying something for gaming, how you're going about that experience is obviously very different. And we're now really set up to be able to support those, new use cases and rushes that, we have conviction will be coming eventually.
I think when you put it like that, in that way, it's like, once you understand it and you understand like the application spaces that this could really tackle, there's no way does the world not move into this, where it's like you say, like the deed of your house, like sitting in that way, and like even like collectibles. I think it was it maybe Logan Paul had like that like Charizard card, and I think or like a really rare card, and he like created an NFT that represented the physical product, but if you owned a piece of the NFT, you owned a piece of the physical product. So then say that a physical product goes from 100 grand to 200 grand on value, he sells it, everybody that owns a piece of the NFT takes that share, which would be 100% increase on your investment in that particular scenario. Right. So like even owning artwork and collectibles, like you mentioned, is like, it's just so many different application spaces that I think the general public don't quite understand and not up to speed on it yet. But once you look into it, there's no way is the future of the world not something that's going to need a place like OpenSea to exist. Yeah.
And we even see, like tokenized stock trading coming out, and like Robinhood and the Robinhood CEO Vlad talked about how he, continues and visions and sees a world where more and more assets are going to come on chain and be tokenized, and so I think there is that momentum. It still feels like we are very early. And, when you think about the different use cases that I share, that I have conviction around, they're going to happen on different time horizons. I don't think it's going to be like all of a sudden 6 months from now, all those things are popping off. I think we're going to see, kind of one pick up speed and maybe the other, kind of two stay dormant. And then, down the road, like a third one picks up. I mean, there's some barriers to entry in some of these things, right? Like on ticketing, Ticketmaster really likes collecting their percentages. They like, kind of owning and have a very successful business model doing that. So I think there's a lot of doors that need to kind of be broken down, but the utility is there and the value add is there. And, again, I can't give you an exact time horizon when it's going to happen, but I've got a lot of conviction that it will. And that's why I joined OpenSea at the beginning, 4+ years ago was, I was always a little bit crypto curious, but I couldn't, figure out why Bitcoin or ETH or Solana was up one day or the other, and I couldn't get my mind around that. I like stock trading. Company does well, the stock goes up. Company doesn't well, the stock goes down, right? That made sense to me, but I couldn't understand what was setting the price volatility within crypto. Yeah. But when I learned about NFTs, when I really understood some of the use cases, the value add, I had my aha moment of look, there's a real problem that, or multiple problems that NFTs and crypto can help solve. I'm excited about that. I'm drawn to that. And that's why I've continued to, stay the course over here.
That's awesome. So you're going to be at OpenSea for a while then?
They take care of me. It's a great place to work. I get to work with some awesome people. There's a lot of really positive things about being over here. So it's been an amazing experience. And
awesome. So well, I think that's a great note to end on. I really appreciate your time and your insights into everything from recruitment to AI to the market and to the trends of the industry and stuff. Maybe I'll try get Gabby on here one day.
Yeah, sounds good. She'll get much better ratings than me, I'm sure. Everyone tends to like my wife a lot more than me, but that's okay.
Yeah. All right. Well, thanks. I appreciate your time, Calder.
Of course, Sam. Thanks for the time.
That's it for this episode of the Decentralized Edge podcast. If you found it valuable, make sure to subscribe, leave a review, and share it with your network. Doing so really helps us to build an incredible guest list for future conversations. And remember, if you're looking for some top blockchain and Web3 talent to drive your business forward, visit blocktav.com to see how we can help, or connect with me directly on LinkedIn or via email at sam@blocktav.com. If you've got a guest suggestion or a topic you'd love to hear more about, send that my way too. Thanks for listening, and see you next time.